Hello and welcome to this video explainer on knowing your numbers. My name is Lee Williams and I'm the Operations Director here at Condé Matthias. Running a business requires mastery of a wide range of figures. Your business's financial performance will ultimately determine not only its success or failure, but your own wealth in years to come. No one goes into business to make a loss, but achieving a profit, and for most business owners, an eventual successful exit, requires you to know your numbers intimately. Even business owners with years of experience can benefit from refreshing their knowledge of the figures that determine the success of their business. To help, we have produced some useful guidance which covers some of the most important aspects of assessing, forecasting, and improving your finances. However, every business is unique, so we recommend seeking expert-tailored advice. Let's look at some of the basic terms that everyone running a business will come across and needs to know in some detail. You must understand your turnover to appreciate the steps required to generate a profit. It's important not to get the two terms mixed up. They are separate but related. You will require this information anyway to accurately calculate your tax liabilities. Understanding your turnover is important in evaluating your performance, as it is a metric often used by investors and lenders when determining whether you can access finance, and insurers to determine the level of coverage offered. Further down the line, turnover will be a key factor in determining your business's value, as it can indicate potential growth and the profitability of an organization. Even businesses currently trading at a loss, but which have a high potential turnover, are often considered valuable, particularly where they fill a niche or have a commanding position within their market. A sales forecast gives you a snapshot of what to expect you to sell in the future. This gives you an idea of what income you will make over a set time period. You will also need to take into consideration the introduction of new products or services and the expected market for these. If you plan to make additional sales in a particular area due to promotion or special event or project, build that into your forecast. A sales forecast should include any new contracts or retained work that is anticipated in the period. When estimating your sales, do not include any tax on the products or services sold, as this will be incorporated into the cash flow forecast later on. To understand how profits and losses are realized, you need to first understand the difference between gross and net profit. For many business owners, the profits of their business will directly relate to the ongoing wealth that it generates for them, and the funding they require to invest more in the organization's growth. You must calculate gross profit first to determine the net profits of the business. Net profits are ultimately what determine how much money you can invest into or take out of the business. A profit and loss statement is a key part of understanding how a business makes net profits, but it is also another indicator of the general health of the enterprise. You should be able to put together a profit and loss forecast from your sales forecasts. The profit and loss forecast combines your business's income and its costs to give you a projected profit figure for the future, allowing you to then forecast other important KPIs such as cash flow. Select a time frame for your sales forecast. Most individuals opt for a monthly basis. To project your sales, examine the previous year's data for any discernible patterns. Adjust your forecast based on whether sales rose, fell, or remained constant. For new businesses lacking historical sales data, begin by estimating all cash outflows, providing insight into the required income to cover these expenses. Next, estimate cash inflows or non-sales related cash sources. These may vary, but can include loan repayments, asset sales, VAT rebates and tax refunds, government or other grants, owners investing additional equity, other sources like royalties, franchise fees or license fees. You then need to determine the cash outflows and expenses. When calculating cash outflows, consider the cost of making goods available. This allows for easier adjustments to the actual cost of goods sold if sales numbers change. Expenses refer to administrative or operational spending and depends on the business type. Cash exits a business through various means, such as asset purchases, one-time bank fees, loan repayments, payments to owners, and investments of surplus funds. Since cash flow revolves around timing and cash movement, start with an opening bank balance representing your available cash. Next, add all cash inflows and subtract the cash outflows for each period. The closing cash balance at the end of each period serves as the opening cash balance for the following period. After completing your cash flow forecast, review the projected cash flows against actual figures for the period. This crucial step reveals discrepancies between estimates and reality, allowing you to identify why your cash flow fell short of expectations. Here is an example. These reports combined can be used to create a comprehensive and accurate cash flow forecast. Drawing up these forecasts for your businesses needn't take long, but it doesn't hurt to seek professional advice to ensure that forecasts are accurate and so that you can have the advice to act on the information you receive. Corporation tax is paid by limited companies on their profits. The more profitable a business, the more tax it will pay. In previous years, corporation tax was paid at a flat rate of 19%, but from the 2023-2024 tax year, new rules have been brought in that sees tax on profits paid at different marginal rates. The corporation tax rate system will now charge a higher rate of tax depending on the profitability of your business. Those companies with profits of £250,000 or more could face the 25% top rate of tax. Only businesses that have profits of £50,000 or less will continue to enjoy the current rate of 19%. Those with profits between two thresholds will pay tax on a tapered scale, which will need to be calculated. Although they are effectively subject to the main 25% rate of tax, a new marginal relief system will reduce this rate depending on the company's profits. Break-even is important to all businesses as it marks a point at which a business achieves no profit or loss at the end of its business activity. This can be useful in understanding the financial performance of a business and may indicate where it needs to focus its efforts to prevent a loss or build profits. By analysing break-even, you can examine the margin of safety for your business and show how many sales it takes to pay for the cost of doing business. By achieving this, you can feed in different elements, such as an increase in price or demand, and see the impact it will have on your profits. Similarly, you can add both variable costs and fixed costs into the analysis to calculate the impact of changes on your profitability. With inflation continuing to rise in the UK at a historic rate, many businesses will be all too familiar with their costs. As mentioned, costs can significantly affect the profitability of your organisation and its cash flow position. However, as costs will play a critical role in the success of your organisation, there are steps you can take to lower them over the long term. However, to accurately measure your costs, it is worth doing regular analysis of your spending to understand how money leaves your business and where costs are likely to rise and fall in future. Your balance sheet gives you an overview of your finances and acts as a barometer of the overall health of your company at any given time. In the current climate, many companies' balance sheets are likely to have taken a hit. Getting an insight into your business's progress will inform you of whether and how you should make improvements to your operations. As a business owner, there is a lot you need to keep on top of, and in an ideal world, you would know and be able to analyse your numbers with minimal effort. However, even the largest and most successful businesses require outside assistance to collate and analyse data, prepare forecasts, and present it in a way that all stakeholders can not only understand, but act upon. At Condé Matthias, we provide a wide range of services and systems that can give you a clearer view of your figures, which are supported by the advice and guidance of our experienced team. To find out how we can help you know your numbers a little better, please contact us. Many thanks for listening.